Hi students, good morning. Today we are going to prepare process costing two methods. What are the process A account and process B account? There are two methods. We are going to prepare abnormal loss and abnormal gain. Okay, let's read the question. In process A passes through two distinct processes A and B and then to finished stock. The normal wastage of each process is as follows. Process A has 3% of units entering the process. Process B is 5% of unit entering the process. Wastage of process A was sold at rupees 50 per unit, 50 paise per unit, and that of process B at 1 rupee per unit. 10,000 units were introduced into process A at the cost of rupees 2 per unit. Okay. The other expenses were or follows. Process A and B's expenses were given here. Sundry materials, wages, overhead expenses, actual output accordingly 2,000, 10,000, 2,000, 100 rupees, and actual output 9,500 units taken from process A, and process B's sundry material 3,000, wages 16,000, overhead expenses 2,375 rupees, and actual output 9,100 units. So from this information we are going to prepare process account, means process A account and process B account. Okay. Let's simply understand the question what they given there in the book. Okay. Process A is normal loss 3%. Wastage sold rupees 0.50 per unit, means this is the scrap value, right? Okay, scrap value rupees 50. 0.50 means what? 50 paise per unit scrap value. Input units introduced 10,000 units, cost per unit 2 rupees, sundry materials 2,000 rupees, wages 10,000 rupees, other expenses 2,100 rupees, and the actual output how much they given? 9,500 units. And the process B is normal loss 5%. We calculated with the input units. Okay, then wastage sold means what I said, this is called scrap value for process B. How much? 1 rupee per unit. And the sundry material 3,000 rupees, wages 16,000 rupees, other expenses 2,375 rupees, and the actual output 9,100 units. Okay, let's prepare. What is the first account we are going to prepare? We are going to prepare process A account. There are two processes they have given. Let's prepare process A account. Okay, in process A account, or what are the process we started with? In introduction of input. Okay, how much units they introduced in process A? They introduced the unit is input unit is 10,000 unit. Okay, so on debtor side you are going to write input introduced in unit column 10,000 entered. Okay, listen here, the cost per unit is 2 rupees. So 2 rupees into 10,000 input units you will get 20,000 rupees cost of material, like that. Okay, entered on rupees column on debtor side. Then what are the expenses they have given on the process A account? To sundry material 2,000 rupees, and wages 10,000 rupees, and overhead expenses 2,100 rupees entered on debtor side. Okay, let's find the total. The total units is 10,000 rupees. The total cost of at the end of the process A is 20,000 plus 2,000 plus 10,000 plus 2,100. You will get 34,100 rupees. The same value you are going to enter on creditor side as the total 10,000 rupees and 34,100 rupees entered. Let's find out on creditor side. Then all the values we are going to prepare only through working note only. Okay. So what you are going to prepare first to count is the normal loss. Normal loss, how much they have given the question? 3%, right? So 3% for input unit, how much they introduced? 10,000 units. Okay. So 10,000 for 3%, 3 by 100 into 10,000. After cancel it, you will get 300 units. So the normal loss how much? 300 units. Where you going to enter? The normal loss always appears on creditor side as per the format. Process account format, normal loss always shows on creditor side. In units column you are going to enter 300 units. By normal loss 300 entered Okay, then we need to find out the scrap value. Okay, what is the scrap value they have given in the process A? Wastage sold rupees 0.50 per unit means 50 paise. Wastage sold means scrap value. Okay, so how much rupees scrap value for this normal loss? 300 units. So we have to multiply that 300 units normal loss with the scrap value 50 paise. After multiplied you will get 150 rupees. So that scrap value you will enter on rupees column credit side 150 rupees against the normal loss, because we find out the scrap value for normal loss. So for that you are entering that 150 rupees against the normal loss. Okay, let's find out the abnormal loss. How can you find out the abnormal loss? We have whether it is a abnormal loss. Process A has a abnormal loss or gain. Is the process A get a abnormal loss or abnormal gain? How can you find out? We have the format for that. That is, input unit 10,000 will be subtracted from the normal loss 3% means 300. After subtracted 300 from 10,000 you will get 9,700 rupees. That 9,700 rupees we called as normal output. Okay, then they have given the actual output for process A 9,500 units. So you need to subtract that actual output from the normal output. Okay, you will get, after subtracted the difference between the actual output and from normal output, you will get 200 units. So that 200 units is called, is it a abnormal loss or is it a abnormal gain? How can you find out? Listen, we have the format to find out whether it is a abnormal loss or gain. How can you find out? Listen, if the actual output is greater than the normal output, then it is called as abnormal gain. Okay, or if the actual output is lesser than the normal output, then it is called as abnormal loss. As per the format here, look at here, the actual output is lesser than the normal output, then it is called as abnormal loss. Okay. Okay, so how much the abnormal loss we got? The abnormal loss is 200 rupees. After the calculation we find out where you are going to enter that abnormal loss. Listen, abnormal loss always enter on creditor side. Okay, how much you need? 200 units. So by abnormal loss 200 units entered. Okay, then we need to find out the value of abnormal loss. How can you find out? We have the format for to find out the abnormal value. Okay, listen, before that we need to find out the cost per unit. How can you find out the cost per unit? Listen, total cost minus scrap value divided by total input minus normal loss. Okay, so the total cost what we have, 34,100 rupees minus 150, you will get 33,950 rupees. Okay, then we need to subtract total input 10,000 minus the normal loss, you will 300, you will get 9,700 rupees. Then we need to divide it 33,950, that means net cost divided by 9,700. After divided you will get 3.50, that means 3 rupees 50 paise cost per unit. What is the cost per unit? 3 rupees 50 paise. Now we find out the cost per unit, then we can easily find out the abnormal loss, value of the abnormal loss. So what is the actual abnormal loss unit? What is the unit of abnormal loss? 200 units. Okay, from the 200 units you are going to multiply that cost per unit, 3 rupees 50 paise. After multiplied you will get 700 rupees. That 700 rupees is called as what? The value of abnormal loss. Where you enter in credit side of the rupees column, you are going to enter 700 rupees against the abnormal loss, because this is the value of abnormal loss. Okay, then we need to find out the output. How can you find out the output? Listen, 300 plus 200, how can you get? 500 units. 500 units need to subtract it from the total input units 10,000, you will get 9,500. Similarly, 150 plus 700 850 rupees. That 850 rupees will be subtracted from the total cost 34,100. You will get 33,250 rupees. These output value and the cost, total cost, net cost is called as process B account. You are going to write against this value, you are going to write by process B account. Why you are going to write the process B account? Because we have the two process. What they given in the question, process A and process B. Then the output of the process A will be transferred to process B as the input value. Okay, so for that you are going to write by process B account, which will be transferred to the next process account as the input value. Okay, so now we need to find out, if you need to find out the cost per unit, it will be very easy. Total cost divided by output, that means 33,250 divided by 950, you will get the cost per unit for the process A's account is 3 rupees 50 paise. Okay, we prepared the process A account. Now we are going to prepare process B's account. Okay, what are the items they have given in the process B account? Normal loss 5%, wastage sold 1 rupees per unit, sundry material 3,000, wages 16,000, other expenses 2,375, actual output 9,100 units. Okay, from this information we need to find out the process B's. We need to prepare process B account. Okay. Whenever you prepare the process B account, what is the first account you are going to start? So you always, they have given, apart from the process 1 account, they have given process 2, process C, or process A account, B account, C account. You have taken the input value for process B, taken from the process A account, right? 9,500 and 33,250 will be taken from the process A account and enter here as the input value for process B account. Okay, 9,500 and 33,250 entered. Against this value you are going to write to process A account, which means this is taken, this two values taken from the process A account only, you are writing to process A account transferred. Okay, then other expenses, what they given in the question, expenses, all the expenses we need to enter on debtor side. That is, to sundry material 3,000 rupees, wages 16,000 rupees, overhead 2,375 rupees. Okay, after enter the given information, we can find out whether it is a after enter the given information, then what we do as per the format, first of all we need to find out normal loss. Okay, so through working note only we can find out the normal loss. How can you find out the normal loss? It's very easy. Listen, the normal loss value they have given in the question, that is 5%. 5% from the input value, how much rupees? 9,500 rupees input value, right? Listen, so 5% for input value 9,500, after cancel it you will get 475 units. That 475 units is called as what? Normal loss. Okay, so where it appears, normal loss always appears on creditor side of the process account. So for that, by normal loss 475 units entered into the unit column. Then we need to find out the scrap value for the normal loss. How much rupees they have given in the question for scrap value for process B? Process B account they have given the scrap value 1 rupees. Okay, so normal loss 475 into 1 rupees, you will get 475 rupees. So the value of the scrap value of normal loss is 475. We entered here. Okay, then we need to find out whether process B is a abnormal gain or abnormal loss. How can you find out? Through the format only we can find out whether it is abnormal gain or loss. How can you find out? First of all, you need to write input value, how much unit? 9,500 units, subtracted the normal loss 5%, value is 475 rupees. 475 rupees subtracted from the 9,500, you will get 9,225 rupees. Okay, that 9,025 rupees we called as what? Abnormal output. Okay, then we need to subtract the actual output they have, what they given the question. What is the actual output they have given? 9100 rupees, 100 units. Okay, so the actual output entered here. Now we need to subtract it. What is the difference between 9100, 9025? The different value is 75 rupees. Whether it is, how can you find out whether it is abnormal gain or abnormal loss? Listen here, actual output is greater than the normal output, then it is called as abnormal gain. As per the format, here actual output is greater than the normal output. How much difference is? 75 units is greater. Actual output is 75 units is greater than the normal output, then it is called as abnormal gain. So for that, against this 75 units, you are going to write abnormal gain. Okay, where the abnormal gain is appears in the process account. Listen, abnormal loss is, if the abnormal loss is appears on credit side, then the abnormal gain is appears on debtor side. If the input unit is appears on debtor side, the output unit is appears on creditor side. Opening stock is appears on, if the opening stock appears on debtor side, then the closing stock is shows on creditor side. So as per that format, abnormal loss, where abnormal loss it appears on creditor side. So the abnormal gain will show on debtor side. So the abnormal gain 75 units entered on debtor side in unit column. Now we need to find out the value of abnormal gain. How can you find out the value of abnormal gain? First we need to find out the cost per unit for the process P. How can you find out? Total cost divided by scrap value, total cost minus scrap value divided by total input minus normal loss. Okay, so what is the total cost? 55,075 rupees minus 475. How much you got? You will get 54,150 rupees. Similarly, total input is 9,575 minus normal loss 475. After subtracted, you will get 9,025 rupees. Then we need to divide it 54,150 divided by 9,025. You will get 6 rupees. The cost per unit is how much rupees? 6 rupees. Then we easily find out the value of abnormal gain. So how much abnormal gain we have? 75 units into cost per unit 6, you will get 450 rupees. So what is the value of abnormal gain? 450 rupees. Where you enter on debtor side against abnormal gain, you are going to write in rupees column 450 entered. Okay, then we need to find out the difference between find out the finished stock. How can you find out the finished cost? The total input minus normal loss, you will get 9,100 rupees output. Then what is the total net cost for that output? 55,750 minus 475. What is the difference between value? 54,600 rupees. So this is called finished stock. Okay. Thank you. Take care. Do you have any doubt? Please comment into the comment box. Thank you. Take care.